welcome, ladies and gentlemen, to the second edition of Birla Sun Life Mutual Fund presents Voyage, powered by ET Now. This year's Voyage will be propelled by the sales of clarity, commitment, and consistency. The agenda is to help investors maximize the current bull run, learn about the benefits of long-term investing, and indeed stay invested, for this is just the beginning of the good times. So as we sail off, I'd like to first welcome on stage the Managing Director of ET Now, R. Sridharan, to please come up and present his opening remarks.
ET Now is delighted to be partnering with Birla Sun Life Asset Management Company in an initiative that we believe will help millions of Indians secure their financial future through systematic investment in equity. According to a recent report, financial assets account for just a third of total household savings. Gold and real estate account for the remaining two-thirds. And even within the one-third that goes into financial savings, mutual funds account for just 2.5%. Three-fourths of the asset under management in the mutual fund industry still comes from investors in just top 5 cities. India's smaller cities and towns are largely untapped by the mutual fund industry. As stakeholders of this industry, the fund houses, distributors, and even the media have a collective responsibility to improve investor education and inclusion. With that, let me make way for the next speaker, who will tell you how his fund house has delivered consistent returns over the past several years. Thank you very much.
Thank you, Shri, for those very insightful words and setting the context for our next speaker. So we are kicking off with our first presentation for today. It's on navigating the deep seas of investment. Our speaker, A. Balasubramanian, CEO of Birla Sun Life Mutual Fund, has more than 17 years of experience in capital markets. May I please welcome Bala on stage? Let's welcome him with a huge round of applause.
First of all, on behalf of Birla Sun Life AMC and myself, sincere thanks to each one of you for making yourself available for our investment voyage. As you all know, we had started this investment voyage last year, as we had felt that we were at the cusp of a big turning point for equity investing, as well as for the country as a whole. And we strongly felt that we were at the bottom of the cycle, and it can only get better as we move forward from here on. I'm happy to say that April to March period of last year, Sensex delivered 25% return, Nifty delivered about 27% return, and majority of Birla Sun Life mutual fund schemes, equity schemes, gave return ranging from 40 to 90%. And flows in equity schemes too has shown sharp recovery, surpassing the previous highest inflow that was achieved in the year 2008. I'm happy to say that expertise the fund house has created in the two asset class through 3 C's has brought us high level of synergy between the teams in order to make Birla Sun Life Mutual Fund as a process-driven asset management company in the Indian mutual fund space. We at BSL AMC believe that we are now entering a phase where financial assets will become the instrument of choice for personal savings and wealth creations. But having said that, we are all aware that the mutual fund penetration levels are still very low, which only enhances the scale of opportunities and going forward. So we can continue to remain extremely optimistic in building the business to the next level. With this, let me conclude with a powerful Warren Buffett quote: without passion, you don't have energy. Without energy, you have nothing. And we need to remain passionate about building the business. With that, thank you very much for your listening and look forward to a great day ahead.
Thank you, Bala. Thank you for those interesting numbers and insights. I'm going to request you to kindly stay back on stage for a candid question and answer session, which will be moderated by ET Now's Senior Stocks Editor, Nikunj Dalmia.
Bala, my first question is more like a compliment because Birla AMC has achieved quite a bit in a very crowded AMC market. So before I ask you some specific questions, let me understand the secret sauce. You mentioned about 3 C's. Why don't we dwell into it?
The last year in our investment voyage, we spoke about the people, process, and performance. And all of them have to get aptly supported by a clarity of thoughts, clarity of thinking, and the commitment actually to deliver what we believe is essential for building the business to the next levels. And that's, I think, the 3 C's is coming from all the people who are responsible for running the business. And as you know, the mutual fund industry is, of course, has got great potential to grow. At the same time, we need to have very consistent investment performance. And globally, the mutual funds are driven by the large pool of investment performance that they are able to deliver, which actually helps the large pool of customers to grow. I'm quite happy to say that last 4 or 5 years, the journey for Birla Sun Life mutual funds have been good. And we also felt that there is a greater need for actually contribute to the marketplace of increasing the awareness. And one such event what we are doing today is an extension of what we did last year.
India is the market of choice for global investors.
Yeah.
All our good companies currently are owned by foreign institutional investors. But if I look at the average participation by an average Indian, it's sad. But Indians don't believe in Indian stocks?
Maybe I think it's just a question of time, actually. I think it's changing. But what you're saying is right, that yes, despite the industry is being at 20 years old and having delivered good performance, and also having multiple number of times talking about the importance of investing in mutual fund, etc., but still we have not seen much growth coming in, which I see it as a big opportunity. And the big opportunity is coming at a time where we believe that things will go much beyond what you have seen in the last many number of years. And one of the assumptions what we had made last time, many times we keep discussing about the what may not happen. But one of the questions which I used to always ask is, are we prepared for positive surprises? And what we have seen in the last year is the one.
The theme of last year's Voyage edition was buy into equities, margin of safety is on your side, valuations were looking attractive. But after the recent run-up, for someone who's planning to invest now, how is the margin of safety looking? Because bull markets, they always climb the wall of worry and they come down on ray of hope. I see a lot of hope around us. There is a lot of optimism.
Having spent a good number of years in the mutual fund space, being part of the capital market for long, many times we try to find an answer for something which you can never find an answer. And many times I've seen even the fund management business, when I was also managing money, is the P multiples you can always say that is high, but the question is, how do you actually look at that? There are many companies even today are trading at a multiple times in 30 plus, and we keep discussing whether 30 is right or 35 is right or 20 is right. You'll never get an answer to that, especially in an economy which is actually a growing economy. So therefore, sometimes trying to find an answer for something you can never get an answer. It's my view, I think it's a futile attempt to make that.
Okay, final question. As an AMC, you manage nearly 24 schemes. A lot of distributors have a concern, which is that they have appetite to sell only one product, one scheme. So which is one Birla scheme they should sell?
It's a 1 or 2 schemes is not something which is more important. It's how much of your investments is gone into equity, how much of your assets is gone into fixed income, how much of the assets are gone into other physical asset classes. All of them are actually extremely important from the investor's point of view. And within that, as you rightly say, there will be some schemes which, of course, the popular scheme for us is from an equity. But that doesn't mean other schemes are also done equally or perform better than that.
Dodging my question now.
Clearly, we have 2 mother schemes. The 2 mother schemes which I mentioned about, like fund and equity, with the dynamic bond fund in the 2 mother schemes. Then all the other schemes fall below that. It's a question of actually which are the schemes in which one should want to make an investment on the basis of the different style of investing.
So Bala, wonderful talking to you, and I'm really looking forward to hear views from Manish and Mahesh. I have no bias because I'll get to hear views on fixed income as well as equities, and then secretly we'll talk about which is your favorite one offline.
Next up, we have a presentation by Mahesh Patil, Co-Chief Investment Officer, Birla Sun Life Mutual Fund. He spearheads equity investments at the company and along with his team manages over 27,000 crore rupees of equity assets. Let's put our hands together for Mahesh Patil.
Hello friends, and welcome to this Voyage, Investment Voyage event. Last year, in the same platform, we talked about the key mantras or the key pillars of our success as an investment team, which were the 3 Ps, which is process, people, and performance. Going forward, taking a step forward, this year we're going to delve further into it and talk about the 3 Cs, okay, which is clarity, commitment, and consistency. While the overall philosophy remains the same in terms of identify good companies, growth at a reasonable price, the processes, okay, which we follow lead us to clarity in terms of thought, which leads us to take top-down macro calls and identify stocks. The commitment of our people passionately working and continuously trying to deliver performance. And the passion, okay, which they bring in gives us the edge which is required in terms of being competitive. And most importantly, consistency in performance, okay, which is very important in terms of giving a good experience not only to investors but also to our partners and to the stakeholders. And with these 3 C's in place, we are sure to go to the path of wealth creation, which we'll see as a journey in the last 20 years, what we have experienced. Obviously, the question in everybody's mind is what now? I mean, what does the market look from here? How do you really see it from here? We all know that we are at a turning point. We discussed that last year also, where the economy is likely to rev up. We haven't seen that yet. While the markets have rallied, we have seen some re-rating over here. We haven't seen still big euphoria, big exuberance. And I think that is something typically, if you look at behavioral pattern, you will see we have seen public money come in at the fag end of the market. We would like investors to come in early and participate in this long-term wealth creation journey. And I think the time is still not lost. Don't wait for the market correction. I think continue to invest. And we would like to take you along with this journey towards wealth creation and ensure that your journey with us is like to be safe and it's in good hands. Thank you.
Next up, I'd like to invite on stage Manish Chokhani, Co-Chief Investment Officer, Birla Sun Life Asset Management Company. He spearheads the fixed income practice at the fund house. Under his leadership, Birla Sun Life's fixed income funds have won more than 30 awards in the last 7 years. Today, he'll enlighten us on the fixed income philosophy and best strategies to deal with market inconsistencies.
Over the next couple of minutes, I'll kind of talk of the broad guiding principles that we have as an investing team and how we try and weave with various strategies across the platform that we manage, about 10, 12 platforms, the big platforms that we manage. The first big guiding principle is our belief that markets are inefficient. It's a core belief because at least in Indian fixed income markets, there are so many opportunities, so many times markets get dislocated, and you can literally exploit them if you're well researched. The other core belief that my team has is that we try and stay disciplined to the fact that markets tend to mean revert. Now it's easier said than done because generally you will have these popular views, the quite dominant views every second, third year, which we'll talk about. This time it's different. But the whole discipline, at least as a fund house that we tend to have, is that unless there is an absolute huge data available to us to believe that it's a new territory that markets, facts, or prices are going to settle in. We keep the historical backdrop right, and tend to only play the mean reverting big themes. Just about a couple of months back, about 2 months back, across our carry funds, and we manage about 45,000 crore of carry funds, which focus on 1 to 3 years of duration strategies. We tapered our duration because we saw 10-year bond had climbed down to 7.5% from good 9.25 about a year back. So in a sense, this theme is we try and play almost regularly. So every single year there'll be a core theme. In a sense that, right now, the theme is actually carry because I think the corporate balance sheets will improve, the macro conditions are likely to improve, and therefore, let's look for some pro-cyclical credit opportunities and you will be able to exploit them well. You need to judge the fund manager as to how in bad times he delivers more than how good he delivers in good times. And which, if you look at the performance of our schemes across these 3, 2008, 10, and 13, you would see us in top quartile across our carry funds and liquidity plus. So it's been a fulfilling journey over the last decade or so. We hope to do so for next many decades for you. Thank you.
Thank you, Manish. I'm going to request you to please stay back on stage. And I'm going to invite Mahesh Patil, Co-Chief Investment Officer, Birla Sun Life Mutual Fund, once again on stage for an interactive question and answer session. And it's going to be moderated once again by Nikunj Dalmia, Senior Stocks Editor, ET Now.
Mahesh, the biggest risk of investment management is the risk of unknown. But you managed to beat benchmark and your competition quite handsomely. So what we want to know is that how have you achieved that?
I think it's a combination of factors. Okay, when you're managing, especially in equity fund, there are a lot of variables which are there. I mean, you have to look at what's happening on the global front, okay, what's on the domestic front, how interest rates are moving, how is the domestic growth is, how each individual sectors are doing. In my experience in the last 10 years, I would say that normally there are 2, 3 or 4 variables, okay, which you need to focus on, which are the key variables. Rest, everything else is noise. At times when the markets are slightly kind of range bounds, we have to really focus on bottom of stock picking, which is very key to our performance, which was the case, okay, which we did in 2013, when the markets was pretty range bound. But I think ability to identify stocks early, and that too with strong research team what we have, and we rely a lot on our internal research, and also a good, robust risk management framework to ensure that you don't take excessive risk, because when things go well, I think it is a tendency to really go overboard in one direction. But as you know, things are very uncertain, and we have seen markets really, unknowns can come from anywhere. And that time your portfolio should be resilient able to handle that and make course correction. So also a good risk management framework overlaying all these things I think is important to ensure they're able to do well across market cycles.
Manish, you mentioned the power of compounding and the benefits of long-term investing. But every asset class, it follows a cycle, a bear cycle, a bull cycle. So what is the importance of a cycle? Isn't it important to time the market? Because ultimately this bull market we are enjoying, it will become a bear market some point in time.
Well, I think everybody wants to time every asset class, I mean, and get so that you can maximize the returns. But it's not always easy to do that. We as investment managers, we take the liberty to time the markets based on the judgment and the skill sets and the resources what we have. But as a common investor, I think it's difficult to really do that. So it's important to really invest into asset class, okay, at regular intervals, depending on your risk profile. There is a mean reversion which happens across asset class over a longer term time frame. So whenever there is underperformance in asset class, okay, it makes sense to probably increase the allocation over there, especially when you have a slightly longer term, because the cycles are normally around 5 to 10 year cycles for any other asset class.
Okay, Manish, I'm going to open my last question, and I'll define the time frame here. For someone who has a 1 year time frame, 3 year time frame, and a 10 year time frame, 1, 3, and 10. We are looking at all categories. Which are the best products and which are the best asset classes? You know,
personally, I've been bullish on equity for the last 1.5 years, 2 years, and I think you're going to be making a lot of money out there. Huge growth delta is what we started to cite about a year ago.
So 1 year is equities.
1, 3, 5, 10. Of course, you will do a lot more return in equity.
1, 3, 5, 10 all equities.
Yes, of course, you're going to do a lot more in equity. Did you buy insurance, ever? Do you make returns? A rich man shouldn't buy insurance, by the way, but, you bought insurance. It's fixed income is insurance. Fixed income is a capital protection scheme. I'm sweating hard to ensure that I beat inflation every year by a reasonable margin. So we come as a savior to investors.
I guess the broader message from both Mahesh and Manish is that if you have a short-term time horizon, medium-term time horizon, and a long-term time horizon, please invest in equities. This is just the beginning of the good times, and it is important to take that leap of faith.
Now, many of us have doubts when it comes to long-term investing. What exactly is long-term? Why is it beneficial? What are the caveats? To answer all these questions and more, we have a special industry speaker with us today. Please welcome the founder and fund manager of Helios Capital, Samir Arora. And Nikunj, if you can please come back on stage and conduct a one-on-one chat with Mr. Samir Arora.
What I'll do is that rather than using my privilege of asking him questions, I want to open this one to the audience, and we'll make it much more interactive this time around. I can spot a gentleman right there. Yes.
Do you think that the technology also do play a role in making decisions? When there was a time when technology was not there, and the information used to come late, now everything is available instant, and the decisions are taken very instantly. So how the market reacts to that philosophy of getting information
instantaneously. I totally disagree with that. I'll tell you in different ways. I think that nothing gets discounted. People keep saying that this information got discounted. In fact, some people say this company paid $4 billion to the government, but now the weekend has happened, so now it's discounted. So let me tell you, I own HDFC Bank for like 20 years. And many people own it for 18 years. Ask them why do they buy HDFC Bank? They have no reason. It's the same reason which I had 18 years ago. Nothing has changed. And you look at all the stocks in consumer, pharma, IT, nothing has changed. Nothing changes. I don't think technology matters.
I've got a Twitter question. I promise I'll come to you. And the question, I'm going to just phrase the question first, that I have 15 years time frame, 15 years. Is that a good enough time frame to give money to a mutual fund?
First thing is that you should look at it for the last 10 years what that fund has done. If that fund has underperformed for some 8-10 years, by the way, if you look at the offshore funds, half of them have underperformed and their sizes are about $2 billion each. That they don't deserve $1. If for 10 years you've underperformed all the cycles of up and down and all your style changes from growth style to value style. But if you've done well in the past, and broadly is the same philosophy, you should. 15 years means you should give it for 5 years also, because the point is 15 is very good. But it doesn't mean that you will only make money in the long term. If your entry is by chance below like last year if you had invested, you don't have to wait long term. You should continue, but it's not that the guy should not be scared that if I have to invest in equity, I will only make money in the long term. It's not like that. People make good money in short term.
The gentleman there has been standing. Yes, please.
Most of the people in this room are today looking at equity in a positive manner. But there are downsides. So what do you think is the downside in Indian equities right now?
Downside is, first of all, in a big picture sense, is always there. In India, you can say downside is there. There are many things which are a bit sensitive on TV, although I'm generally an insensitive guy. But in a big picture sense, equity downside can always be there. Something can go wrong to people, something can go wrong to the party. There are many things that can go wrong. But generally today, ultimately you have to take a bet one way or the other. And today the bet should be in its favor. But obviously there can be downside and you can't overly protect from it. If somebody feels that there is more of that, then they will invest less.
My question is, in 2004, UPI has taken place with combination of lot of parties and higher interest rates, bad shape of economy. 4 to 14, for BSE Sensex is 5,000. At 14, Modi win date 25,000. In 10 years, index has given 5 times.
Correct.
My question is, 14 to 24, what is your expectation?
That answer in a big picture sense, if you had asked us in 4 also, would have been the same, that it will follow earnings growth. Earnings growth historically in India has grown 15 to 17, 18%. Beyond that, if we are very thankful, but over long periods, it won't go much out of that as an index. But if you select few stocks here, there, you get more. That's how it works.
Ladies and gentlemen, that's Samir Arora for you, the Maverick. Let's put our hands together for Samir Arora, one and only.
We are joined by the Union Minister of Shipping, Road Transport and Highways, Mr. Nitin Gadkari. He unfortunately could not join us here, but he has a message for us. He's looking back on the last 1 year of the Modi government and what we can expect in the next 4.
Dear friends, infrastructure is very important for the development of our country. And I am in charge for the road sector. When I have taken a charge as a minister, our speed was 2 km per day for national highway. By the end of March, it comes to 12 km per day. And up to the end of May, when we complete 1 year, it will be 14 km per day. Within 2 years, my target is to make it 30 km per day. Some 86 projects are now the problems related with the land acquisition, forest environment clearance. Already all the problems have been solved. Now the projects are running. Some 26 projects where still we are facing the problem, but we have submitted one note to the cabinet. After clearance from the cabinet, I am confident that we will solve this project, the problem of 26 projects. As far as the road sector is concerned, now the things are moving fast. At the same time, we are going to change new Motor Vehicle Act, by which we are going to change this automobile sector of this country. We want to encourage the technology which will be useful in Indian scenario, and at the same time, we are also encouraging the biofuels. As far as road sector is concerned, we also launched hybrid model where 40% is from the government, 60% from the concessionaries, land acquisition, environment forest clearance, and what are the other problems. They are all problems that will be responsible to the government. And every year on annuity basis, for interest cost plus 3% profit, we are ready to offer them on annuity basis. So this is a hybrid model. People are giving really good response for it. Today, here is a good atmosphere and good support from the government for Make in India, for definitely for the road sector, and you are all welcome here to participate in development of our country. Thank you very much.